If you've been following my journey, I've been selling my initial real property and transitioning into syndication deals lately for a more purely passive investment strategy. One critical part of my portfolio is the American Home Preservation Fund, or what folks in the Hui call AHP for short. George Newberry, once apartment owner, operator, and mentor to me, is now sponsoring the podcast. His private fund, which by the way also accepts non-accredited investors, cuts the middlemen out and allows you to invest directly with him to fight the mortgage crisis in America. Join him by purchasing distressed mortgages while getting a double-digit annual return paid monthly. Find something else better out there? Well, let me know. Feel good knowing that you are helping families stay in their home after buying their underwater note at a huge discount. Invest as low as $100 by going to ahpservicing.com/investors. And if you want the free Burn Zone book, please send me an email at lane@simplepassivecashflow.com.
I like to buy stuff. Well, that's a liability.
We talk a lot about QRPs, but when is it a good idea to have it and when is it not?
This is a story about a dude named Lane. And one day he went, tried to rent them out, and then he became one. That's the man.
Hey guys, Lane Kawoka here with simplepassivecashflow.com. So I was talking to an investor recently and they were talking about creating a QRP or what's called a Solo401k, all the same thing. Basically a self-directed IRA account so you can invest in things like real estate. It was a good situation where it's not really a good idea to use one of these things. Now they only had about $125,000 in that account that they wanted to roll over into one of these QRP Solo 401ks. My comment was, these QRP Solo 401ks aren't cheap. Sometimes they cost a couple grand. And there's always a annual maintenance fee of a few $100 per year. Just my gut feeling on when the crossover point is like, if you have maybe $200,000 or more, this individual only had 125,000, especially with the CARES Act allowing people to take out 100 grand penalty free without the 10% penalty. To me, it was like a no-brainer. Other contributing factors, adjusted gross income was a little bit lower this year. One spouse was working less. So taking that additional income this year wouldn't put them into a higher tax bracket than they normally would. And all things said with taxes, they were well below the $300,000, $326,000 adjusted gross income. When I have clients that are making $300,000, $500,000 plus adjusted gross income, then it makes a lot of sense why you wouldn't want to take a withdrawal from your retirement account, because that would make your adjusted gross income up and it would keep you in that highest tax bracket. I know this sounds really weird, but those of us making a couple $100,000 or less, or $326,000 or less, we don't pay too much taxes. We're not in a big tax bracket. Some respect, it makes sense to pay your taxes on it today. Get it out of the retirement accounts so you never have to deal with that stuff ever again. I mean, look at all this debt the United States government is doing these days. I mean, how else are they going to pay this off? Well, it's with inflation. They're just going to inflate the money it's supply. That way, nobody gets upset with the politicians. People just assume that it is what it is. But it is a very insidious way of inflating your debts away. By paying off the debt that we incur today with future dollars, it's a less of an impact, less value in the future. But who it hurts? Well, it hurts the savers and it hurts people who aren't in fixed commodities such as real estate. If it were me, I would prefer to pay my taxes today than wait and pay it even in a tax sheltered account, which you have to pay the taxes in the future. I feel like I'd get killed in the future with the tax brackets and where that's heading. And personally, I'm probably going to be making more money in the future, which is a very different paradigm shift for most people, thinking that their retirement income is going to be less than what they make now in the working days. I got rid of my retirement funds way back when in 2015 and 16. Never looked back. I had a self-directed IRA account, self-directed Roth IRA account, which I think are probably some of the worst ways to invest, because that one you have to worry about the UDFI tax. So I got rid of that because at the time my account was only about $60,000 to $70,000. So again, under this certain threshold where it's not worth to have the setup fee and then all these monthly or annual ticky-tack fees on top of it. Again, rather just have my money out and just invest it in as part of my personal cash liquidity. Now, my personal strategy, what I'm going to be doing first is fill up my today bucket of cash flow. I'm trying to get up to a certain point where I don't have to worry about daily expenses or extravagant, again, daily expenses to that point. Get it to a point where I'm at $10,000 to $20,000 coming in every year passively. And I think at that point, then what I'm going to do is open up a solo 401k and start to fund that. But I think people are doing it backwards. They're putting money into these retirement accounts when really they should be funding today. And then when the today bucket is full, then they should go and fill up the other buckets. And then they should even go look into starting a nonprofit account after that and possibly putting that solo 401k in that nonprofit. That's kind of getting a little bit too more advanced. So we talk a lot about this stuff in our mastermind. You guys can check out details of that at simplepassivecashflow.com/journey. We are also going to be starting a spin-off group for those looking to pick up their first remote turnkey rental. I want to create something that was reasonable to getting started. It's not going to cost 5, 10, 20, 30, 40 grand like other groups out there, but it's going to get you the group and the Rolodex. And we're going to kind of do a little bit of hand holding in a group environment where, we're going to have you educated and be able to buy your first remote rental. It's not going to be the best rental, but it's going to get you started onto this road to financial freedom, buying assets that cash flow. Follow-up questions on the QRP, check out my info page at simplepassivecashflow.com/QRP to learn more about the reasons why to do a QRP. But thanks for listening, and please share the podcast with your friends. And for those of you who want to get a free trial to the first 3 modules of the e-course, go to simplepassivecashflow.com/club. Sign up there and you'll get a link to your inbox to get a login for that portal. If you guys have any questions, shoot me an email at lane@simplepassivecashflow.com. Again, QRPs, solo 401ks are not for everybody. This website offers very general information concerning real estate for investment purposes. Every investor situation is unique. Always seek the services of licensed third-party appraisers and inspectors to verify the value and condition of any property you intend to purchase. Use the services of professional title and escrow companies and licensed tax, investment, and or legal advisor before relying on any information contained herein. Information is not guaranteed, as in every investment there is risk. The content found here is just my opinion, and things change, and I reserve the right to change my mind. Above all else, do your own analysis and think for yourself, because in the end, you are the only person who is going to look out for your best interests.